This plane crashed in 1973. Everyone survived, but when it comes to taxes, most business owners end up like this plane, torn apart. A reminder of how fast things can collapse when the calculations are off. And that's how I see a lot of business owners treating their taxes. No plan, just vibes. Thinking every trip, every vacation, every flight is a write-off until they crash. I'm in Iceland. Waterfalls, lava fields, insane views everywhere. And yes, I make tax content. I literally teach this stuff. I've got camera gear. I've got the receipts. So why am I not writing this trip off? Because if a guy who literally makes tax content can't write off a trip where he's making tax content, then yeah, I know what you're thinking. What the hell does it actually take to write off travel? That's a very good first question, so let's talk about it. Here's the code section 162A. A business expense has to meet 3 items: ordinary, necessary, and it has to be directly tied to your business. So you're thinking, I'm here traveling, making content in Iceland, I'm good, right? No, there's another section that's stricter, 274D. And here's what it basically says. Deductibility depends on real business purpose and a requirement to be in this specific location. A photographer hiking Iceland to get inspired, that is not deductible. A real estate agent flying a drone over waterfalls to practice his drone shots, yeah, that's a no. Answering emails in front of a glacier, that's not a business meeting, nah. Bottom line, who is paying you and how does being here make you money? Now let's talk about this video. Will I get clients because you're watching this or you found me on social? No doubt, but I could have filmed this from my home studio. Nobody's paying me to be in Iceland. The content is valuable, but Iceland itself was not required. And since the trip had nothing to do with US tax or accounting, I can't deduct it. And honestly, this trip was a personal trip. I really wanted to come to Iceland as a bucket list trip, but I decided to film content anyways. Now, I've shown you how this doesn't work. Now let's switch it up. How could I made this trip deductible? Now, let's say this was a paid gig. DJI, like DJI Mic 2, Nomadic, like travel bags, or even Sony, because I'm filming this on a Sony camera, hires me to film content in Iceland, breaking down gear that business owners can write off. Now we're talking flights, hotels, rental cars are all now deductible because I'm here for work. There are a ton of content creators who get paid to review gear or shoot brand campaigns. In those cases, the business makes the trip necessary. That is key. So DJI, Sony, or Nomadic, if you're listening, watching this, let's make the next one deductible, please. Let me give you guys some real world examples of how traveling and deducting it could work. Number 1, let's say you're a medical professional and you travel from California to New York to purchase a medical device that you needed for your business in order to make money. Number 2, let's say you're an entrepreneur and you travel to a convention and you got new business opportunities and network with people and actually made money from it. Number 3, let's say you're a influencer, a tech influencer, and you travel to CES and you monetize that content. As you can see in all 3 examples, you needed to be at that location in order to make money. It's simply not working while traveling, it's traveling for work. Look, I can't just grab this laptop right here, perch up on this canyon, and call it a work meeting, right? I actually need to be traveling for work, not working while traveling. Check this out. I'm actually gonna be filming my wife and my cousin over there. They're on some horses, and even though my cousin is a business colleague of mine, she's actually my client, they're not gonna be, I can't just call this trip work, right? Even though we're talking about taxes and her new business opportunities, even though I have a business colleague traveling with me this entire time, that does not make this trip deductible on that merit alone, right? We are working while traveling, but we're not traveling for work. That's the key distinction. I'm walking back from the airplane, but I'm interrupting you guys in the middle of the video. If you like this type of content, travel stuff, cool cinematic things, I'm still talking about taxes and finance and all that stuff, I need y'all to hit that like button, subscribe, and please comment that you want more of this stuff. Back to the video. So how do you make sure that your trip qualifies primarily for business. There are a few legit and pretty simple ways to do it. The first one is traveling for continuing education. I do this all the time. As a tax professional, I need CE credits to keep up my licenses. And guess what? As a real estate agent, insurance professional, even medical professionals, you need those credits too. So why not knock them out in a cool location? Second is meeting with clients. Now I'll be real. This one's tougher in today's world because Zoom exists, but if your client prefers face-to-face meetings and there's value in building that interaction, well, that can make that trip deductible. And third, meeting with business partners or your team, whether it's a strategy session, annual meeting, or team building retreat. If there's an agenda and business gets done, it counts. Then once business is handled, sure, build in some fun, explore the city, enjoy the views. Just make sure business came first, not the other way around. Too many people follow the advice that they see on TikTok. I know this is a YouTube video, but whatever. Let me show you what happens when that advice gets tested. In Nas v. Commissioner, 2 professors tried to expense trips around the US, but they had no evidence of plane tickets or dates of their travel or business purpose aside from their testimony it would deem personal. So the IRS courts denied that travel. In Robinson v. Commissioner, the husband tried to deduct family trips to Disneyland and Disney World. He claimed hotel stays, airfare, and that the trips with the family were for business purposes. He failed to present any evidence of business use. IRS said it was a vacation, again denied. So if you have no agenda, no documentation, no proof that your business needs to be in this exact spot, that's how audits happen. Don't let that happen to you. Again, right now I'm in Iceland hiking up this crazy ass canyon, and if I told the courts I was investigating how to be better at tax law, how to be better at accounting, clearly it has no result out of it. Again, so don't let that happen to you. Now don't get it twisted. There's nothing wrong with taking a vacation. I'm here for peace, for nature, for me. But I'm not pretending that this is a business trip, and I'm proud of it. But next time, maybe I'll host a retreat, maybe I can partner with a brand, then game on. If you want to learn how to write off travel and do it legally, you gotta do it the right way. Learn the game, build a brand. But before I let you go, let's recap everything you learned on this entire Iceland trip. Number 1, travel must be ordinary and necessary. Number 2, you must be physically required to be in that location. Number 3, if someone's paying you, it almost makes it irrefutable. Number 4, I need y'all to document everything. And number 5, last but not least, traveling for work, that's deductible. Working while traveling, probably not. All right, y'all, that's it from Iceland. I'm gonna see y'all back in the US. Peace.